There we go. Okay, well, good morning. And Sheetal, we can put the questions in the chat. I think we're going to have a large group, so if you wouldn't mind putting the questions in the chat. We would also love to see you. We have a lot of people who are incognito tonight, so if you want to turn in your camera, that would be great. And without further ado, Sheetal, welcome.
Thank you, Mary. Good morning, everyone. So listen, thank you for putting those cameras on.
Good morning.
I see a lot of you are putting it on, and I love it because you're going to be with me for an hour and change, but we're going to learn a lot. And if I know it's boring to be on Zoom, I get it, but this is also convenient. So if you put your cameras on, I promise you, it will be more interactive. It will be more educational. I want you to walk out with something today, and we're going to help some families with this information. Okay, that's the most important thing, right? So my name is Sheetal. I'm the branch manager of CrossCountry Mortgage. And let's see, CrossCountry, we're licensed in all states. I'm personally licensed in New York, New Jersey, Pennsylvania, Connecticut, Florida, Georgia. I'm licensed in many states. What else? I'm a CE licensed instructor for several years. This is the only class I teach. I love teaching my mortgage class because it's fun. It's great. It's what I do from morning to night, and then I do it again. So I've been doing it for 25 years, and I really enjoy what I'm doing. And I'm sure you guys, like realtors over here, you guys like to be realtors. We are in the people business, and we help people together, and it's fun. So guys, today's class is FHA. And I'm going to ask you guys questions, and this way you will please answer. Please unmute and answer, okay? And this way we'll also remember it, okay? So you all signed up for this class, so there's a reason you signed up for this class besides the credits. You chose this class, so let's make the most of it, okay? Please. Who is FHA and what is FHA? I have clients come in all the time and say, I want that loan, FH, and then I'm like, oh, FHA? I go like, yeah, that one. So people know this 3-letter word. What is it? And who is FHA? Please, can someone answer? Nobody knows?
Isn't it Federal Housing Authority?
Who's answering that? Can I see it? Oh, Lisa. Thank you, Lisa. Thank you for making that attempt. It's Federal Housing Administration. Everybody remember that. Why should you know about mortgages, right? Is because you're the first point of contact for your clients for the most part, and they love you guys and they want you to know more. If you know more, you have more credibility with them, and you will educate them a little bit about mortgages. You should not become mortgage lenders, but at the same time, a little bit of information, it's good, right? So a Federal Housing Administration. Now, it is governed by HUD. HUD is Housing Urban Authority, and HUD, which is a government organization, insures this loan. So look what the government says, right? In America, they want to promote home ownership. So FHA is a government insured loan. Can everybody remember this, please? It's a government insured loan. Somehow just breathe it and internalize it. And I will explain to you why I'm telling you this. I'm going to repeat it a couple of times. I want you to know. It's an insured government loan, okay? HUD is the #1 mortgage insurer in the world. They came up with this mortgage to help make it easy for homeowners to promote home ownership. They created this program, which is very easy to qualify, and I will prove it to you, and you will agree with me by the end of the session, okay? Now, because they made it so easy for people to qualify, that's a risk the bank is taking, right? Hey, just 3.5% down. Hey, you don't need to have perfect credit. Oh, your debt to income ratio can be high. We'll give it to you sooner, relatively soon after bankruptcy, right? So it's like very easy, and therefore they're taking a big risk of a lot of money. And that's why the banks insure the risk and the possibility of a default by charging a mortgage insurance to the buyers. Did everybody understand what I said? right? What if they default? They stop paying the mortgage. Who's going to be responsible for all that big bucks that we give out? And that's why the insurance fees to offset some of the costs that the bank will incur in case of foreclosure. Okay? It's a very simple story, guys. We can talk to our clients about it. People like to understand, what are we doing here? It's nice to know. Okay? Good. Did you know that FHA is the most popular government-backed mortgage in this country? It's the number one. Even though there are, hey, it's FHA, it's FHA, it's not conventional. Oh, can we do conventional? We go through all of that, but it's a fact. Okay. Now, let me share screen. Everybody sees it? Awesome.
Yes.
Yes.
Awesome. I'm just, okay. Good. Now, I encourage questions. It's not that big a class that we can't have questions. I want you to ask me questions, because with every question you ask, guys, you're helping everybody else to learn. We can all learn from your questions. So please ask me questions, okay? Unmute, ask, and then go back to mute. So we have a, okay. All right. I don't want you to read. Okay. Let me ask you some questions now. Back to it. What is the minimum down payment required for an FHA loan?
3%.
3.5.
Yeah, 3.5. Okay, good. That's great. And for what kind of property? Which properties? What is the eligible
family.
properties for the 3.5?
Single family.
Sorry?
Single family.
You said single family, someone saying condo. What else? Any other answer? Jose? Owner occupied. Okay, Jose saying owner occupied. Okay, what else?
Multifamily?
You could do two family too, I believe.
What is the definition of a residential property? Let's start with that. Okay. It's a residential property consists of 1 to 4 units.
Okay.
Okay. 1 to 4 units, but residential. Not mixed use. You can have a restaurant as the 4th unit or one of the units, right? No commercial, a residential 1 to 4 unit, and condos also. Okay. So FHA, you could get an FHA loan with 3.5% down for a 1 to 4 unit, and condos. We will go into details, but that's what you need to know. Jose mentioned owner occupied. Is Jose right? Does somebody have to occupy the property?
I believe so.
Yes.
Oh man, 100%, guys, internalize it. I wish we could be investors and get the 3.5 down. Oh my God, that would be crazy. No, that's too much. Okay. It has to be occupied. And they're strict about the occupancy. I want you to know that. Did you know that the #1 fraud in the mortgage business is occupancy? It's not income, it's not asset, it's occupancy. So when a client comes and tells me, hey, I don't qualify, but I'll just do it in my brother-in-law's name. Or, I want the FHA, but, I have a very low rent. I don't want to live there. Tell them you're talking to a lender. I have a license. And I'm sorry, you cannot get an FHA loan because this is for primary residence only. As simple as that, right? So internalize that, okay, please. Now, may I ask you one more question? How long? This is a question that realtors usually ask me. How long do you have to live in this property after you get the loan?
2 years?
Who said that? 2 years?
2. Me, D.
Thank you for answering. Anyone else?
6 months to a year.
A year.
Okay, so as per the note, when you get this mortgage, you've got to live there for a year. Okay, now after
3
that,
years, you said 3, right?
no, 1 year.
Oh.
1 year, okay? Now after the 1 year, you can rent it and move out and keep that beautiful house of yours as an investment and accumulate some wealth, okay? Such a low down payment, it's pretty cool. Okay. I'll come to the slides. I would rather ask you some questions. This is a nice interactive group, I can see that. Out of the 3.5% down, we got that, right? Did you know that all of the money required for the mortgage can be a gift? 100% gift allowed. Okay, it's incredible. A family member, how is a gift? Gift has to be from a family member, guys, because the bank does not recognize a friend giving a friend money. That doesn't happen, and at least that's not the guidelines. Okay, now I'll tell you why I'm saying all this to you, right? Is because I recently closed a loan that was rejected by a big bank. It was an FHA loan. They rejected it. And when I'm looking at the loan, I'm going, wow, it's a good loan, right? And as I asked questions, it was all good. I'm saying, why are they? I said, I want to know why they rejected it. Before I got the documents and everything, I said, tell me, give me the negative. They rejected the loan only because the buyer had deposited cash in the bank and then used that for the down payment money. And the bank is not going to, it's over. The underwriter went to the system, hit reject, the deal was closed. We closed that loan in 2 weeks because it was such a beautiful loan. How did I do it, guys? Because you see, assets, cash money is not allowed in the mortgage world. We cannot use cash deposits towards the purchase of the home. Please remember that, guys, because I'll tell you why. When you speak to a client as a first consult, right? And you ask them, hey, how much money are you looking to put down? And if they say 50,000, please go ahead and ask, do you have the money in the bank? Make that a habit to ask, because you can immediately coach them. Immediately, you don't need to wait. I will do it. But by the time they come to me, you've already led this and said, hey, listen, cash deposits are not going to be allowed. Okay, so we need to put it little by little. Or you're going to have to get a gift. Talk to your lender immediately about it so she can guide you, he can guide you as to how to deal with this situation. Okay?
So, sorry, can you please clarify what you're saying?
No, because FHA, it can be 100.
100? You want me to repeat what I said, Carla?
Not repeat, but clarify. Like if I come to you and I have $50,000 in the bank already and you can verify it's there, are you saying I can't use that money?
No, that is beautiful.
Okay,
That's
what I thought.
No,
You're
I'll tell you what happens, right? So
Wait.
Cash deposit.
I think I want to make sure I'm understanding. It might be easy question. So I want to make sure what you're saying is if money just shows up in your account all of a sudden, it can't just be cash. You have to have some kind of documentation to show that it's a gift or it was a lawsuit settlement or something like that. Is that what you're saying?
yes, Carla. Yes,
Got it.
that's what I'm saying.
Got
So
it. That's what I need.
So it's quite common. We come across with clients, they say, I have the money, but it's in my locker. I keep cash at home. I gave it to my brother-in-law. I'm going to sell a house in my country. It could be any, I come across all these things, right? It's a 401k, it's an annuity. So how as a lender, what am I going to tell them next? Okay, now I'm going to guide them about cash. Cash deposits are not allowed, guys. No. If there's a deposit, we as a bank, right, we need 2 months of bank statements in an FHA loan. If I see a large deposit in the bank, I'm going to question it. If they said the deposit cash, I cannot use that. As simple as that. And there's no exception to this rule, period. You cannot use those funds.
Question. You're saying that the deposit. So if somebody gives you a gift, it's up to $10,000, correct?
No, a gift could be 200,000 because a gift is.
Oh, I thought there was a max.
No,
Well, what if
not
you
at all.
deposited at once? I think that's where we're going with that.
That's a cash deposit.
So are you saying undocumented?
Well, a gift could be a cash deposit too.
1 person at a time. Sorry, go ahead.
Sorry.
I'm sorry. But isn't a gift, if somebody deposited, isn't it cash? I mean, even though like.
Not at all. Oh, good point,
It'd be
Barbara.
traceable.
Oh,
No, it
you
has to be a
saying-
check, a gift. No, let me finish, please.
oh,
A gift has to be a check. We will need the donor's bank statement to verify the funds came from the donor and the donor had the money prior. Like in the 30 days, there was no cash deposit in the donor's account also.
And
so
what
you're
about,
saying- Go
go
ahead.
ahead. What about if they came from, just for argument's sake, somebody's dealt it to your account and then they write a letter for you? It's a, family member or
Somebody's
somebody.
what account?
If, say you like you bank at Chase or whatever, and somebody, instead of writing you a check, they sell you the money or, they send you the money. Is that accepted too or no? That's what
No.
I need to understand.
No, not at all. No Venmos and no Zells.
Okay, so that's a good point. Thank you.
No,
So
let
are
me
you
repeat it.
saying-
No, listen, if you wire the money, right? Let's say if a donor wants to give $1,000 gift to your client who's buying a house and does it through Zelle, that's okay. I can use the Zelle. Now show me the donor's bank statement showing the money came from there. And the donor didn't have any cash deposits before that. It was the donor's own funds documented. I cannot see a cash deposit anywhere.
So you're saying undocumented cash that you can't prove where it came from.
Absolutely, yes.
All right.
Okay, so yes, so that is what it is. So now I was coming to the loan that was rejected by the big bank. It was only for that reason. I did the loan without the bank statement from the buyer. I did a 100% gift. I took that as a guideline, which is an FHA guideline, and I closed the loan. That was the point I was trying to make. And why is it important for you? Well, when you're asking somebody for down payment, hey, how much are you looking to put? You may want to ask them one no question. Do you have it in the bank? If not, you can give them a little tip or direct them to a lender to guide them. Yes, Nancy.
Yeah, so if someone says I have to sell a property in my home country, and then they say I sold it, and now I have this influx of this amount in my account, is that acceptable?
Good question, Nancy. And this happens, right? When was this deposited? And where did the money come from? Where is the source? Can you show me where it came from? Now, when I have to show something like exactly like this, hey, I sold a property, I need so much documentation. Now I need proof the property was theirs, it was sold. I need additional paperwork. If I absolutely need to show the bank that deposit, I will ask for more documents and do it. Otherwise, I try not to show it to the bank, just to simplify the process, right? I am not going to show my underwriter extra stuff. I'll stay within guidelines, only show what is needed. In a bank, less is more. You never show an underwriter more stuff because now they ask for more things. It's just drama, unnecessary. Okay. Yeah.
Okay.
Frank?
Yes, you said that they need 2 months of bank statements. So if this deposit, let's say it's cash, was made 3 months ago, is that long enough? In other words, all right, now it's showing up as in the account.
100%. So I will not show it. No one in the bank, no one's going to see it. I saw it, but that's about it. I didn't see it. I'll just take it away. So what is our job as a lender? Is damage control. And to do it right from the beginning. So I'll tell you one thing, you as realtors, you must be a little confused sometimes, saying that one lender says no, and the other can do it. And they're both doing the same guideline, same program, right? It's because we need as lenders to be creative. We don't show everything. We just show what's needed within guidelines. That's it. If I saw that deposit, why am I going to upload that document? No one will ever see it. It's over. Okay, I'm only going to show less. I go the extra. Even when I start the loan, I've had cases where very, very often I got the contract, I see a deposit, large deposit. I say, okay, I'm not going to see this. Give me the next bank statement. I'll wait. I'll give 1 month and then I'll give the next month along the way. Never show an underwriter incorrect stuff. It's respect to the underwriter. You cannot show it to an underwriter and say, hey, can you please garbage it and delete it? It's the integrity of their position. You don't do it. It's better to, from our side, we take care of it from my office. Anyway, this seemed to be like a hot topic here, the asset situation. Moving on.
Well, Sheetal, it's Lisa. I have one question about this because I had a client
Sure.
who was using their bank was Chase, and they were using Chase as a mortgage. And I understand what you say about the 2 months going back, but in this particular case, because Chase was their bank, they had access to all of their records and they went back 6 months. So is that something that does come up if people are using their own commercial bank or retail bank for their loan? Do you see
Look,
that?
yes, you
Just people
cannot
should be aware of
Chase
that.
not to, yeah, absolutely. It's all in their system.
Right.
We are creative, right? Like we mortgage lenders. So I do a lot of loans. I'm known to do loans rejected by the banks, or I lend more than the banks do,
Mhm.
right? So we're different. You have to, as a realtor, you should have you give out referrals. You refer
Mhm.
lenders. You should have a bank. You should have different types of lenders so you can match the personality types, like Chase. Chase, if you have an A+ buyer,
Mhm.
okay, they're A+ documented income, they're buying a $2 million home, they're putting a large down payment. Oh, please give it to Chase. They'll bend. They will bend. They'll give probably even a better rate. Who knows what they'll do for that
Right.
time?
That was the case. That was the case. Mhm.
Exactly. But like we have great loans too, but they may, they'll say, hey, move all your assets to Chase. We'll give
Right.
you a quarter off. We'll do an auto pay.
Exactly.
They do all those things which we cannot do, right? But on
Right.
the other hand,
They go
if
back.
Chase goes and sees one small thing they don't like, they will deny the loan,
Mhm. Okay.
which we
I
will
just-
close in a heartbeat.
Right. I just wanted to mention it because it seems like everyone's trying to get their ducks in a row here. So that is one of the cases where the 2-month look back is, a sliding scale.
Yeah. You
Thank
can't
you.
tell them, hey, don't look. It doesn't work like that. No.
Yeah, right.
Yeah,
Okay,
there's
thank
no
you.
such things. Yeah. Okay. Now let me ask you another question. Let's see what you guys all come up with. What is the minimum credit score required for an FHA loan?
580.
Huh?
585.
585. Thank you, Lisa. Who else wants to?
6.
600?
590.
580.
Okay. So guys, look, it's confusing, right? It's confusing for you. Imagine for our buyers, how confused are they? They're confused too. Okay, so let's clarify this point. It is 580. However, I would like to go a little bit in depth. Like I close loans at 580 all day long, but the bigger banks don't. They have internal overlays. So they have restrictions on credit scores and they're more conservative. So that's why you guys are confused, because different lenders giving you different, scores. But remember, it is 580. Now, another thing, if you refer a client to me, I'm doing a client and I have 580. I'm nervous. I'm nervous because what if by the time you guys find a house, what if they go to 579? That's not fun. You guys spend weekends with them. So in that case, what I do is, first of all, when I meet a client, I'm automatically coaching them on credit. I'm good with credit. There's no charge for it. I have the experience. I'll tell them how to bring their scores up. Damage control. Please don't go and co-sign. Don't go buy a car. Don't get into debt. Don't open more accounts. Don't do inquiries. So that by the time they find a home, the score is up, not down. So at 580, I'm going to call the realtor and disclose that with the client's permission. Hey, listen, the score is 580, and this is what I have told the client to do. And the client has agreed and accepted that this is the deal we have. Yes, I'm going to give you the letter. We're going to start, but this is your commitment to us for your own home. Right? Because we don't want them to ever say, you didn't tell me. Oh, no, we're not only going to tell you, we're going to hold you accountable. We're going to follow up. We're going to hold it strong together. Okay. But yes, we do it a lot. We do it a lot. Okay. Now at 580 scores, the bank does want to see some compensating factors, like some other strengths. It cannot be, it's 580. The guy has no money. It's all 100% gift. My debt to income is high. Cannot be like layers and layers of risk. Okay. Just so you know. Okay. Any questions on score? Okay.
Sheetal,
Yeah,
Can you give us the formula for the DTI?
sure, Jose, would love to. What is a DTI? Jose wants the formula for a DTI.
Debt
What
to
is-
income?
Yeah. So what happens is when I'm consulting a family to pre-approve them for a mortgage, how much I can lend them, I am checking three things: income, credit, and assets, correct? And I'm doing some calculations. I'm going to look at the credit report and count all the debts that they have, the monthly obligations, their monthly car loan, their monthly student loans, and any other monthly that appears on the credit report. I'm going to add all those liabilities, right? And I have that number. Now I'm going to tell you there are two ratios that I will work on. Ratio number one is called a front ratio. Okay, what is a front ratio? It's very easy. It's the mortgage payment, principal, interest, taxes, home insurance, mortgage insurance, everything included, monthly payment, mortgage payment, divided by their monthly income. That will give me the front ratio. And then I have a back ratio, which is also called the DTI, debt to income ratio. What is that? That is the mortgage payment plus all their monthly expenses, which I found on their credit report. I'm going to add all the debts, now divide that by the monthly income. And that gives me the DTI. What is more important, guys? Is it the front or the back?
The back,
Why is that?
because there are other debts included in there, like car notes and
Yes.
student loans,
Yeah.
credit
So
card.
yes, absolutely, right? It's the overall picture, obligations that this client has. So if somebody made 100,000, had minimal debts, is going to qualify for much more than someone who's 100,000 and has 3 cars and student loans and alimony and child support. May not even qualify because the debts have consumed the income and there's not enough for him to qualify, right? So now what happens when I sit with the client? Let's go a little deeper with this DTI. The number one goal is, guys, one of the mantras I have always followed in my business is I will tell, if not everyone's going to qualify, right? All our clients do not qualify for a mortgage. I will tell them why they don't qualify. And I'll give them a solution. And I'm telling you, a very common call is they call me later after 1 year, 6 months, 4 months, say, I did everything, I'm ready for another meeting. I will put the ball in their court because they deserve it. And these motivated people, they come back, they do it because I'm coaching them. I'm telling them what I need, right? So I do spend time with them because we're planting seeds, right? It's like they don't qualify now, but they can qualify in the near future. Now, when I look at somebody whose DTI, the back ratio is high, but their income is good, right? I'm going to again start my coaching and say, listen, just this way, you qualify for X loan amount. You can buy this price, but if you pay your this debt, you can qualify for so much more. If you pay a couple more, you can qualify for so much more, right? It's so simple. Like one of my things, I'm very good with money management. That is my calling. I'm good. I'm conservative. I know how to like leverage assets and I understand this stuff. So I'm constantly trying to help clients who it's my natural thing. I can't help myself but tell them what to do because like a lot of the clients, they don't understand how much even credit card interest they're paying. They have money, but they're paying so much of interest, it doesn't make sense. So I give them suggestions, options, and then I say, you know what, you guys go home, decide what's best for you. You make the decision, this is your money, but I suggest this for these reasons. Now, by paying off debts, you can qualify for more. So good. So I don't know if you guys sometimes get confused and say one lender told you 500,000, another one said 400, other one saying 700. How confusing for a realtor who's going to spend so much time with his family, right? So that's why I want you to understand that these are good things like, hey, you pay this and I can get you more. Easy, easy, easy. Okay.
Is child support considered a debt? If they
Ah,
see that automatically coming out?
good question, Jen. Good question. If child support is your expense, right? It's an expense that I have to add to my back ratio. It is considered a debt if it is going to be a payment for the next 3 years.
Okay.
Yes, it is. Child support is a debt. In fact, it's such a big debt, like it's a mandatory. You have to pay your child support.
And student loans as well, right? Always student loans?
So student loans, Jen, look what happens with student loans. Let's talk about that. That's a very big one. So student loans, a lot of people got deferments, which means that they don't have to pay now. Hey, I don't need to pay for the next year. But as a lender, when I'm doing the mortgage, I need that monthly obligation because after 1 year, you're going to start the loan. I need to factor that debt into my DTI, right? So I'll tell them, listen, can you please call the student loan company and do something called an income payment plan, which is, take the lowest option for the monthly payment and just let me know what that number will be.
Okay.
So I can be a little aggressive. Okay. And control my DTIs. It's called an income-based payment plan. So I asked them to get that and get it for the longest term so the monthly is lower. Okay.
Thank you.
Welcome. Seller concession. Do we all know what is this? Who here does not know what's a seller concession? Okay, a seller concession is nothing but it's a negotiating tool. You tell the seller to pay for the buyer's closing costs. In this market, it's been crazy, right? It's not common because sellers are rocking. So, but it's still an option. And FHA's come back again this year because there are fewer transactions, the rates went up. So it's a different market compared to the pandemic. We are post-pandemic, and I do see some seller concessions now and then. Okay, so seller concession is nothing but basically the seller, you just put in the contract, the seller will pay dash amount towards the buyer's closing costs. Okay, FHA allows up to 6%, which is a huge amount. Like the entire closing cost mainly can be just paid by the seller. I put over your parent or a relative can co-sign. So let me just explain a little bit what I meant by that. FHA has a very sweet guideline for a one family where we can use a non-occupant co-signer for qualification purposes. Let me give you an example. Parents probably live in California and their child wants to buy their first home in New York with a 3.5 down, and the child does not qualify with his income. The parents can co-sign for that child, even though we know the parents are out of state, they're not going to be occupying, they're non-occupants. We can still use the income and qualify them, all with 3.5 down. It's very sweet, very flexible. Very, very flexible. Okay. So that's what I meant by that.
Good morning, Sheetal. I just wanted to ask you, going back to the DTI, could you clarify what the percentages are or your maximum percentages for the back ratio and the front ratios?
Oh, thank you. That means you're paying attention. I like it. So the front ratio, the max that FHA will go is 46.8, 46.9. We're stretching it right at the limit. And the back is 56.9. It's the highest in the industry. Like nobody can go higher than that. In a bigger bank, they have overlays and they reduce this internally for their own. It's their own guidelines that they make, but we don't. We are direct lenders for the government, so we just go max all in. Did I answer your question?
Sheetal, can you explain like the premium, the mortgage insurance premium Because that I'm sketchy on.
Yes,
Chantel,
I
thank you.
will.
You did answer my question. Thank you.
Oh, most welcome. I'll come to that. I'll come to
Okay.
that.
Thank
Yeah,
you.
if I don't, just remind me. I want to cover that. That's important, very important. Okay, good. Reserves. Anybody in this group here that who doesn't know the meaning of what is a reserve? Okay, everyone here knows what's a reserve. So FHA requires no reserves on a 1 and a 2 unit. It requires 3 months of reserves in a 3 and a 4 family house. Okay.
Yep.
Conventional requires more. Conventional requires 6 months reserves. We'll come to conventional. I'll compare conventional versus FHA, and that you will see the difference. Okay, but just want you to know about reserves. Again, I want to highlight the flexibility and the less requirements for an FHA loan. Okay.
Will we be able to keep this document?
The PowerPoint?
Yes, ma'am.
Yeah, I can email it to you. Mary, are you going to give me their emails after the class?
This is actually being recorded, so you'll have everything when we have. it
No,
sent
can
to
I
the client.
email them certain FHA links after the class or no?
We are not permitted to give out as a company policy, our realtors, but I can put your information in there and they can email you.
You know what? That's better, guys. I have some stuff to send out to you later. If you want it, just send me an email. Okay. Okay, that's fine. Sounds good. Okay. Moving on.
Thank you.
Okay, let's move on to 2 years employment is required. FHA. In a conventional, I can do a loan with 1 year tax only. That's a good part. That's very sweet that I do a lot of, but this is 2 years. Okay, good. 1 to 4 units, we went over that. No co-ops, okay? FHA will not fund on co-ops. They will fund on condos. I will talk about condos a little later because it's, I'll explain to you which properties are eligible for FHA financing when it comes to condos. No investors, I told you that. You can buy it as a primary, and then when you decide to move out, you can keep it. No one's going to come and say, hey, you have to refinance your FHA loan, but you cannot, buy it as an investment property. Okay. Can you get multiple FHA loans, guys? Anybody knows a little bit about that? Like let's say I bought my FHA home. I want another one. It's nice. I want one more. Can I?
I don't
Isn't
think
it after? Okay.
Yes. Go ahead.
I was under the impression that you can't have 2 FHA loans, but you can qualify for the next house if you sell your current one. Is that not true?
All right. So let me clarify this, okay, for the sake of everybody. You cannot have 2 FHA loans unless there's an exception. So let's say if I bought a house, I was single, and I bought a 1-bedroom condo and I got an FHA mortgage. Now I have 2 kids and I don't fit into that condo, then I can get another one. If my family grew after I purchased that FHA and I have birth certificates to prove it, I can. That's exception number 1. Exception 2 is, let's say I moved out and I moved to Florida. I had a job transfer. I just moved out of state. And now I can get another FHA because my job is too far away. I cannot commute. Okay, so those are the 2 reasons. Outside of that, you can get another one. Now, what do we do is sometimes if the client benefits from it, what we do is when they have they had an FHA loan and we refinance it into a conventional loan, remove the mortgage insurance, and now they have a conventional, so now they can get another FHA. Now they can get an FHA. You don't have to sell that property. You can just refinance it into a conventional loan. Okay. All right. What else? Yeah, no investor, that's fine. Okay, okay, okay. Yes. There's no income limit in an FHA loan. That's another question that comes up. The government's giving 3.5 down. Hey, I make a lot of income. Can I still get it? Yes, you can. There's zero income limit. It's really cool. One other thing is we use 75% of the rental income to qualify if it's a multi-unit, if it's a 2, 3, or 4 family, I will use 75% of the rents of the other units as their income to qualify, right? That's the same guideline for a conventional as well, 75% of the gross rents. Okay, now I have a really good question. And I want to see what answers I'm going to get. What is the loan limit on an FHA loan? We're in 2023, so we have new limits now. So we're going to all get updated today.
I think it varies by county, doesn't it?
It does, yes. But can you give me one county? Give me any idea that you have. Which counties do you serve?
Sorry, I'm in Westchester. I mean, I serve Rockland and Westchester.
Do you know what's the limit in your county?
No.
Okay.
I
like to
haven't been
know?
updated in the last few months.
Yeah, no, so that's why we're going to get updated. So this is a link I'm going to email.
A million.
Send me an email, guys, after the class, and I will email a couple of links to you that you should archive and save. This is one of them.
Can you put your email in the chat, please?
I can, yeah. But let's go over this really quick, right? So the state, I'm going to tell you when you open it up how to use this, right? So let's just put state and let's go to New York. And I'm just going to hit enter. Let's get all the counties here. Now, before I give, can you please tell me, anybody wants to make me a guess on what's the limit? I want to hear what you guys think about. Would anybody? One family.
Orange County, it's 460, 280, something like that.
Okay, anyone else?
I think Westchester's 700, somewhere in the 700s.
Okay, anyone else?
I just Googled it and it said 1.89. So
yes. Oh my God, don't Google, that's cheating.
I know.
No, but at least, okay, got it. Now look at this. Everybody look here, right? Westchester is 1,089,000 and change, right? You Googled right. That's on a one family, guys, 3.5% down. Where else in this world are you going to get this? Not in any other country. I don't know if any other country that gives money away so easily, okay? Yes, of course, different counties have different limits because it's based on the median income of that county and the property values, the median price. There are a lot of factors that go into the high cost areas have the high loan limits. That's really what it is, but have a look at it. 1 family, 2 family, 3, 4 family, okay? Let's go to New York. Nassau, New York, these are all high cost areas. 1,089,300, 2 families, 1.3, almost 1.4. 3 families, 1.6. 4 families, 2 million. Okay, now this is a volatile. That's why I will send you the link and you can save it and archive that email with the, I'm going to send you another link as well. How to determine which condo is approved for FHA financing. That's another link I want you to send, but this is something that you always want to keep, okay? It's quite a lot. Like, look, you guys thought it was 700 and it's not. So our clients don't know either. So this is a good piece of information to share, okay? Okay. When do you know how flipping works? You know, when somebody's flipping a house, an investor bought it and flipped it for a profit. And if the end buyer wants an FHA loan, there are certain guidelines to it. And those guidelines are that the buyer has to wait 90 days before they can get into a contract. There's like a period of 90-day wait if it's a flip. Just the back of your head, just so you know. Okay. So when it is a flip, I try my best not to do FHAs because those investors want a quick in and out. They don't want to wait the 90 days, and that's a disadvantage of an FHA, clearly.
Wait 90 days to sell it?
Yes, you can't write the contract. The contract date has to be at the 91st day or after.
Okay, thank you.
Yeah, you're welcome. Okay, good. Moving on. Okay, this is another story I want to share with you. I got a referral from a local banker in Chase. He's a loan officer. He's a very good loan officer. He's very professional. I know him. I have a relationship with him. He called me and said, Sheetal, my bank won't do this FHA loan. Can you do it? And I want to tell you why he couldn't do it and why I could do it. The client was a W-2 earner, first-time home buyer, all good. But you know, he started a side business and then he reported losses like in a Schedule C. He just put over the cleaning and then he just started like a big loss, right? So that disqualified him. So the reason I could do his loan is because I didn't show my bank the tax returns. I have the ability to close a loan without tax returns. Just W-2 and pay stub verification. And that's how we did it. Okay, just so you know. We do verify the W-2 that it's true.
What
We
about
verify.
1099 employees, 1099 businesses, real estate agent, for instance?
Oh, I love it. Let me pre-approve all of you right now. Okay. So tell me, how do you get a mortgage? How does 1099 people get a mortgage? I do a lot of them.
I'm at tax returns.
Okay, so guys, look, you get a 1099, you get a gross income that goes in the 1099. When you guys get paid your commission, the taxes for the government are not taken out, as opposed to a W-2 earner. Yes, simple. Now you go to your accountant puts a Schedule C, the gross income that's on the 1099 goes as gross, and then you write off every expense you've had while doing business and more. Because the more income you report is an adjusted gross income after expense, the more taxes you pay to the IRS. It's very simple. All right. You try to maximize your deduction. So, you know, and then you have an adjusted gross income, and that's the figure we look at. I do have broker loans, guys, which are just 1099, no taxes, just the gross income. But those are broker loans. Those are like higher down payment. They're not the 3.5% government-backed securities. That's another world. That's another bucket of lending that I do. Right? But just so you know. Now, what I do a lot for realtors and all your self-employed borrowers, pay attention to this one because this question will help you learn. See, that's why questions are important. If someone is self-employed for 5 years or greater than 5 years, then I can do a loan with just 1 year tax. We are in February and our self-employed clients have not filed their taxes yet. That creates a huge opportunity for them and for you and for me. I'm constantly coaching clients, working with their CPAs on how taxes should be done so they qualify. All I'm asking for is the 2022 taxes last year. That's it. If they had a loss in 2021, I don't care because I will not see it. Nobody will. Okay? Just 1 year and we close. It's not an FHA loan. It's a conventional loan. I'm answering it because Frank prompted me to. Okay? And for self-employed, we have many other options like the bank statement programs. We have so many options these days. It's crazy. But when it comes to FHA, the answer is adjusted gross income, average of the last 2 years. That's how it works. And the income cannot be declining. That means that your income cannot decline from 1 year to the next year by more than 20%. If it declined by more than 20%, we're in trouble. We won't qualify at all because the bank thinks you're going down. And the threshold is 20%. Yeah. Of course,
What
Barbara,
if somebody's retiring and they make just as much as they made when they working, or, maybe a hair less? How does that work?
I love those retirement incomes, those pensions, social security income. Can't even get fired. I love that income. What are you talking? I do that all the time. I love it. We use all of that income.
No, but my question is, do they qualify for the FHA?
100% yes.
Okay, thank you.
They qualify for all the programs. There's no discrimination on that income. It's great. Permanent disability income, social security income, pensions, all of that. Child support, alimony, we can only count it if it's going to continue for greater than 3 years from the date of this closing. And how do we know that? We need the children's birth certificate. How old are they? Okay. So that's that. Okay. Any questions? I'm going to move on. Let's do a little analysis with FHA versus conventional. Okay. FHA, I went over so many of the advantages, but we can group all of them up. Qualification, which means the DTI is higher than conventional. I told you the DTI for an FHA is 56.9, for conventional is 50. So it's lower, okay? Lower down payment. Why do I say that? It's 3.5% on a 1 to 4 family. So guys, for a conventional loan, let's compare it. What is the minimum down payment on a conventional 1 family?
20%.
What's the minimum down conventional 1 family? Primary residence. We're going to go primary, apples to apples. We're going to compare it.
5%.
Yeah, it's 3%. I do a affordable mortgage with it has some income limitations. If the income is not too high, then it's 3%. Otherwise, 5% down. Yes. On a 2 family, what is the minimum down payment for a conventional loan? 2 family house, primary residence, conventional, minimum down payment, please. Anybody?
10?
It's
10%.
15%. Can you all write it down somewhere? You see the difference? 3.5, 15, big difference. Okay. Seller can put 6% towards closing costs for conventional. In a 5% down loan, it's 3%. Seller concession, so it's lower. Okay. Disadvantage, higher mortgage insurance. Now let's take a moment to talk about mortgage insurance in an FHA loan, because it's a disadvantage. So let's talk about it in detail. There are 2 mortgage insurances in an FHA loan. Number 1 mortgage insurance is something called an upfront insurance, where 1.75% is automatically added to the loan. Remember I told you why? Because it's a high risk loan and the government creates these flexible guidelines and they protect themselves. So 1.75 is automatically added. Number 2 is the monthly mortgage insurance, which is 0.85% on a 3.5% down loan, and 5% and 0.80 on a 5 plus higher down payment loan, 5% or higher. Okay, it's like standardized. Let's talk about rates on an FHA versus conventional. Because the government is very understanding about your credit, they do not hit you with a higher rate if your scores are super low. A little bit, not too much. On a conventional loan, Fannie Mae and Freddie Mac have a grid on rates and the fees that they charge based on the credentials of the client. For example, if you have a 760 plus FICO score, it's amazing. But if you have a lower tier, there are adjustments that they charge. There are adjustments on a 2 family, 3 and 4. The rates on a 2, 3, and 4 are higher than a 1 family. In a Fannie Mae, not in an FHA. FHA is very understanding. 1 to 4 family, no adjustment. It's just a different program. Okay. One of the biggest disadvantages, let's talk about that, is What is the listing agents on this call, right? Let's talk about all the listing agents. I'm asking you, why don't you accept FHA offers? What is the bother? What's bothering you with an FHA loan when you get that pre-approval letter?
The
I'll
inspection,
be honest, yeah,
What did you say?
the inspection.
What inspection? Okay, tell me more. What inspection?
Just loose, loose stair railings, chip paint, all of those things can be a pain in the ass.
Okay. Yes, okay,
appraisal?
you're right. No, you're right.
the appraisal,
Particularly if you've got a seller who's in an as-is situation.
Right.
Okay,
Seller not wanting to accept 3.5% down, Sheetal.
what is that?
A seller not wanting to accept the 3.5% as a down payment.
Yes, yes. All
And
your answers.
traditionally, they used to take longer to close.
I'm glad you said traditionally, because it's not the now. I close FHA loans in 2 weeks. No, all your answers were very good, very, very good. But let's talk about it a little bit, right? Years ago, decades ago, FHA appraisals were stricter than what they are today. Today, they are not very strict. The couple of things that are an issue for an FHA, which are not for a conventional, is number one, peeling paint. And number two, the handrails. Both items are not really very expensive. Other than that, if the house is not, is it broken, even in a conventional loan, they will ask you to fix it. That's the myth that realtors, sometimes when the appraiser comes and they say like, oh, this has to be fixed. And then the realtor says, but this is a conventional loan. Yes, I know it's a conventional loan, but it didn't meet the standards and has to be done. Okay, number one. Number
I
two,
had one that they picked on the sidewalk on the corner of the property.
okay,
And this
something
was
was
like 3
broken,
months-
right, Barbara? Maybe
The
it's
sidewalk was
safety.
broken.
Yeah, it's true. It's a safety issue because if somebody trips on that broken sidewalk, that's what they're trying to protect. You're right.
Tree stump,
So now,
all the stuff.
so
And it was
now
inside the property.
if you have a listing that nothing is broken, there's no peeling paint, there's no sidewalk issue in a handrail, everything is fine. All of these items are good. Would you consider an FHA offer? Because the reality is an FHA deal is because it's insured by the government and so flexible. Sometimes your buyers or someone else's buyers are more qualified than conventional. Some of these FHA clients that I see, they're so motivated, in love with the house, they'll do anything to get their home. And sometimes I have clients who put 40% down and they'll dump and kill the deal for the smallest things because they just will. And that happens all the time. What I do tell my FHA buyers, I explain to them that they are weaker as compared. I tell them, listen, if you're offering $500,000 and somebody else is offering $500,000, but the loan is conventional, you won't stand a chance because they'll go with the conventional offer. So money talks. Give your highest and best because that will be an incentive for the seller to consider you. And the second thing is, if the FHA appraisal asks for some repairs, would you consider doing it? We can make it easy on the seller, right? It's their choice. But a lot of them will say, we'll do it. It's fine. So,
Are you going to share a list of those things, FHA requirements?
I cannot because I'm not an appraiser. I can ask my appraisal company to see, but it's like a handbook that they go by. I doubt that they'll send it to me.
Okay.
But I know out of experience, I do a lot of FHA loans. So I'm telling you out of experience, whatever we just mentioned.
now, doesn't that appraisal, an FHA appraisal, stay with the property for
It does.
6 months? Okay.
Yes, it does. For 4 months, it's attached to the FHA case FHA case number for 120 days.
And the PMI also stays with them throughout the whole loan, right? They can't
So
reach a certain
so
percentage.
the PMI, good point, Frank. Thank you for bringing it up. So the PMI, if you put less than 10% down, the PMI is not going to disappear at all unless you refinance it. If you put more than 10% or more than 10%, it stays with you for 11 years. That is the guideline. After the 11th year, you can request the PMI to be removed when you have the 20% down equity. Okay. Is the value different for an FHA appraisal versus conventional appraisal? Is the value different? Or is it the same?
No, the same.
It's the same. It's the same comms that are being used. There's no different. It's a market approach. What is the appraisal doing? Is finding similar comms to your subject property within a half a mile, hopefully, something that recently closed. Nothing different. Nothing different at all. Okay. All right. One of the big disadvantages for an FHA, if you guys have a condo, I prefer conventional, and I'll tell you why, because FHA is a little bit stricter with the condos that they will fund on, whereas there's many choices with conventional. So that is one of the things. But now let's talk a little bit about flexibility in an FHA loan. Everyone, the next few questions I ask, can you please remember it? If your client had a bankruptcy Chapter 7 discharge, but they never owned a property, it was a discharge without a property. After how many years can they get an FHA loan?
7.
Who was that saying 7? Jen, thank you for the response. Jen is saying 7 years. Anyone else? Please don't Google, okay?
2 years.
think it's 1.
2 years.
Somebody saying 1 year, okay?
2
I
years.
want 3 years. 3 years.
Oh, with the chop, oh, I get it, with the property, got it, okay.
Yeah,
sorry.
no property, okay,
No
Jen?
property, right, okay,
This
sorry.
is no property. First, they don't own anything. They just did a Chapter 7 bankruptcy. Everyone, remember, it's 2 years. Jen, 7 years is conventional, okay?
Thank you.
All right. So you see the difference? I'm trying to pinpoint the difference between FHA and conventional right now. So you see why sometimes we lenders have to go FHA, because we know what we're dealing with our clients. You guys don't. So if I may just tell you, please don't, if I send a letter which has FHA on it and you tell the client and say, oh, that's not a good loan, why aren't you getting a conventional? Go back to the lender. Now they feel bad. They feel like they're getting a really bad loan, which is not the case. They just had a bankruptcy. They just had a foreclosure. I mean, come on. So don't make them feel inferior because you don't know. We know everything about our clients. I would say don't tell them anything. You just pick up the phone and speak to the lender and ask them, is there a reason why you're doing FHA? Get the answer first before you say anything to our buyers, because then they have that feeling that, oh my God, like, they're not. The fact that they can get a loan in spite of their situation is a good thing.
But if we're a seller's agent, can we call you? For a
Oh, I
buyer's
love talking to
approval?
sellers agents.
Yes?
I talk to sellers agents all the time.
And you can
I'll tell you
speak to
why.
their situation. It's not.
Oh, I'm
confidential?
okay. Number one, I will never lie or BS. I'm very transparent. When I give a pre-approval letter and when I sign my name on that letter, I have all their income docs. I have assets. I need to see the bank statements with the money for the reasons I told you before, because they say they have it, then I don't get it. That's not how it should work. I would check. When I give you the letter, it's everything I have. So when you call me as a listing agent, I'll give you accurate information and I'll tell you how long it will take me to close. I'll tell you why I'll give you enough information without jeopardizing the privacy of the buyer with the buyer's permission, because I won't do anything wrong to the buyer, but I just want to do it for their sake with their permission. Does that make sense? I welcome calls and listing agents are always in touch with me. Even throughout the process, I will let them know what's going on rightfully. You owe it to give it to your sellers. So, okay, coming to Chapter 7 bankruptcy, this time your family had a property and they dumped that property in Chapter 7. They owned a property, they don't want to pay the mortgage, they did a Chapter 7, they put their credit cards and the property. After how many years after the discharge date can they get a house? FHA mortgage. Conventional is stricter. Okay, I'm going to give you the answer. It's a tough one. I don't expect you to know this. It's 3 years from the date they actually sold the property. When you do a bankruptcy, what happens is the trustee says the property is included, you don't need to pay the mortgage. Even the mortgage just stops appearing on their credit report. It doesn't appear anymore, it just disappears, right? But the fact is that they own that property. that it's still in their name. They are the recorded, the deed is in their name as owners. That is a problem. They need to sell that property or give it away to the bank by doing a deed in lieu of foreclosure. Call the bank and say, hey, I just want to give my deed over to you. I want to give it over to you. They'll do it. They'll take it with the form. Okay, so you need to guide these people and say, you still own it. You need to sell it. Maybe you can help them sell it. Maybe you can contact bankruptcy attorneys and be their referral, partner to help these owners, because it's a white elephant. They own a property which has been in the bankruptcy. Okay. How about a foreclosure, sheriff sale? They didn't pay for so many years. Ultimately, the sheriff came and took the property away. It went into foreclosure. After how many years can you get an FHA loan?
3 years?
Yes, it's a good answer, 3 years. Okay. So bottom line is between 2 and 3 years, you can get an FHA loan, and it was so much like those are big things. That's a big derogatory thing, right? It's a good thing to know. You have a 620 score, you have a 580 score, you can get it. It's crazy. It's crazy good. So lenient and understanding when the rates are concerned. Okay.
Why did they do that? Like, why isn't it a huge risk? What is the benefit? Just
to promote home ownership, so that to encourage more homeowners to buy a house.
Okay.
Yeah, sometimes it's a lot too. Like it is very lenient.
Could you give us an example of where the rates are right now for your FHA, like a range for the FHA loans versus the conventional?
Sure. So listen, I'm a nerd, I'm a geek. I read a lot on financial markets because I do mortgages for clients. So it's my job, right? So I'm constantly advising them when to lock, when to not lock. I give them daily updates. I give realtors daily updates, weekly updates on what's going on in the mortgage world, because you guys need to know. This week was terrible with the rates. Yesterday, day before, the rates are high. This week, okay? I didn't lock anything yesterday and day before. It was just like, it was terrible, but I locked a loan on Friday, 5.75, 30-year fixed FHA. It was a good loan. So sometimes it's 6.1, 6.2. So rates are attached to the strength and the credibility of the client, but I wanted to answer your question by giving you a range. It's around 5.7 to 6.2, 6.3. Okay. Depending on when you lock the market. But this week it was bad. Yesterday, the stocks were down, the bonds were down, the rates were up. That's what happened yesterday, day before. This week has been a rough week. Okay. So what happened in the pandemic, guys? We got everybody the 2s and 3s. We lenders were heroes. Now all of a sudden we are defending ourselves when we quote. We're like, oh my God. It's as though we're coming out of these rates from our pocket. What was happening in the pandemic? I would quote somebody 2.75, and in the end, it would be 2.5. And they were like so grateful. They just loved us. Now it's not the case because it's so volatile. So it's a sensitive topic. So, and yet, guys, let me tell you, the rates are good. The rates are not bad at all for a 30-year fix. Just to have that mindset, because we had pandemic rates. We are post-pandemic. So let's not compare the pandemic period to a normalizing period. That's what it is. And that's what I tell the clients. That yes, if you like a house, get it, because you can refinance it, right? But did I answer your question?
Yes, Sheetal, thank you. So what are you seeing in the market right now? I mean, are people still trying to buy at these rates?
Yes, good question. So the transactions are fewer. That's what I'm seeing. I'm grinding more than ever. I'm meeting people, qualifying them. And so sometimes people this is my personal experience, so please do not you asked me a question and I'm sharing with you. It could not be someone else's. Like I feel like when I pre-approve a client and they are pre-approved, there is no FOMO. They have no fear of losing out that was there in the pandemic. So they're okay. Like sometimes attorney reviews are not going through. I did have a deal that died out of inspection. which is like more of a normal market. The pandemic market is not what it is this year. Like people are looking into the home, people are considering, they are negotiating a little bit, right? So, but it's very weird because the transactions are few, but so are the houses. So the values are still up there. It's not like the prices are still up because of the demand supply situation. It's like a dead market, right? And somebody, all those people that we refinanced and got them into the 2.5 rates, what, they're not going anywhere. Because some of my own clients called me and say, Sheetal, I want to sell, I want to buy another one. And I was like, okay. And when I'm telling them, hey, what's the new rate? And now they're like, no, it doesn't make sense. Right? And rightfully, even as I'm doing the numbers, it didn't make sense because they have a sweet deal. Does that make sense to you? Anybody else who wants to add anything and share your own experience for the benefit of all? No?
One last question for you, Sheetal. Based on everything you've said today, how does someone win then with an FHA loan or even a conventional mortgage when people are still asking for the highest and best? Like, is there something that they can do if they get into that situation? I mean, can they put down more than 3.5%?
Yeah,
How does that work?
Yeah. So look, I talk to listing agents all the time and I welcome the calls. And I ask the listing agent a simple question. My family, my clients love your house. They are very motivated and they are very able. Tell me 2 things. What is the condition of your house, of your listing? Does it have peeling paint? Does it have a handrail? Because those are things that come up. So I will address the objection right up front. Like, what is the concern? What does a listing agent want, guys? Listing agent wants a smooth transaction, doesn't want drama. They just want to close. They want to look good in front of their sellers. Please tell me if I'm saying anything incorrect. And if we can give them that, then they will consider our offer. And especially when the offer is a good price, right? If I can close the loan fast, I tell them, listen, I'll order the appraisal immediately. I won't wait. My clients love your house so much, they're willing to allow me to order that appraisal. I'll order it as a rush and submit it and get you a commitment. Would that satisfy your seller? Like, what can I do to make this offer work for you guys? It's a question, and then you just shut up and wait. Not everyone's going to go for it, but a lot of them do.
You mentioned before about when there's an inspection and there's something that needs to be repaired. Did you say that the buyer could make those repairs?
Absolutely, Frank. I tell my buyers to do it if they want to win the bid sometimes. And look, you know, we think that repairs are going to come up in the appraisal, and it doesn't come up even. And we close. That happens so many times. Believe me when I tell you that. It's crazy.
So they would
All
have to,
FHA wants is a functional home. It can be in bad shape. It can be an old house in bad shape and not maintained, and we don't care.
right, but they're taking the risk of putting that money out or doing it themselves to make that repair. It's really not something that if they don't get the loan, they'll get back. So they're taking a risk.
That's a good point. So when do we do the repairs? After the loan is committed and we already have an appraisal.
So it could be done after the appraisal's done.
We can
and
do
they
it at the
basically have
last
a-
minute. Yes,
Okay.
of
All right.
course. At the end.
But then you have to have another appraiser come by and verify that?
We do.
Okay.
We do. Yeah, your word is not going to be good enough. We need pictures.
Well, even pictures, I've had it where, no, we have to send somebody out. We can't just take the pictures. You know, they won't just allow me to send pictures of everything painted.
Yeah, you know what it is. They have their license on the line. They're just trying to protect themselves. And you know, sometimes people do wrong things. And so that's why they just prefer to do it themselves. But though I've had a case where the appraiser did accept a picture. But yeah. Okay. Now let's talk about something that is a good topic for today. FHA, one of the biggest advantages, guys, to have an FHA loan is something called a streamline. Only and only if you have an FHA loan can you do an FHA streamline if the rates go down. So let's say a client bought a house today and the rate 6%, right? We locked it in. But next year, After 8 months, 9 months, 10 months, the rates drop to 5%. We're anticipating the rates going down, guys. That is what all the big guys are saying, right? We're anticipating it because we're slowing down. The economy is slowing down. What happens to the rates? The rates go down when there's bad news. In bad economy, the rates go down, right? That's what happens. So if you have an FHA loan, I can do something called a streamline, a government loan streamline, which is get them a lower rate without bank fees, without appraisal, and without checking income. This is the biggest gift and the only miracle in the mortgage industry. It is none compared to none other. In the pandemic, I streamlined all my clients. They were laid off. They had no jobs. They would call me and I would say, let me get to the 2.5 guys. And they were like, oh my God, some of them cried. They were like, wow, we're saving so much money. No jobs. And I was streamlining them, okay? Only if you have an FHA loan, because they would say, can I send my brother-in-law? I was like, yes, only if he has an FHA, otherwise I cannot do it. So we can tell all our FHA buyers that, listen, we can do the streamline. I tell all my buyers that. As soon as it goes down, I'll do it for you. Goes down 1 point, it's a good point, you know, that 1% lower. Now is a good time to do it. We should save at least that 1%.
But what are the qualifications to do that?
So, the only qualification, Jen, is that they made their mortgage payment on time and for 7 months. I cannot do it before 7 months and no lates. If these two things occur and the rates are down, that's all I need because I'm not putting any employment in the application. So no job, no appraisal. It's just a quick title search. It's a specific way. I do a lot of streamlines. It's a specific way to do it.
Okay, and then there's no additional fees incurred to
You
do
know,
this?
it's okay. So I don't want to go into such detail on this, but I will because I want to spend my 10 minutes on condos and then wrap it up, right? So in a streamline, the government will not allow us to add the closing cost to the loan.
Okay.
So the closing cost has to come from that 1 month that they save and the escrows. And so it's a way we do it, but it's only and only beneficial to the client. It is only to the consumer benefit. We do not make a lot of money on this. It's not a money maker for us. We do it more for very little money. We do volumes and it's a great service to our past clientele.
Perfect.
They love us that when we do it. I do a lot.
Can I ask one more question in regards to job? If they switch jobs, as long as they have 2 years working experience, is that okay? Or that's my question.
100% yes.
Okay, thank you.
Just don't change your W-2 and become an Uber driver. Then you lost all your income. Okay, guys, I go through it. It's so annoying. Client calls me and says, oh, Sheetal, I'm making more money than ever. And I say, oh, really? What are you doing? Oh, I didn't like my manager and my job. I became an Uber driver. Oh my God, that's it. It's over. Now you lost all your pre-approval, right? Please stay with the W-2, get your house and then do what you want.
And also if you stay in the same field, it doesn't matter, right?
Not at all. Not at all. Please continue to make more money and keep growing. We'll use the higher income. Okay. Now let's go. I don't have a lot of time, but I want to cover this condo that I promised. I'm going to send you, you see this link? This is the link that we are going to use to see if the property is. So this is the link I'm going to send to you, which I want you to archive and save it. If you have an FHA condo buyer, then what you're going to do is you put New York, right? And what you do is over here, give me a zip code in New York, please.
10703.
10703, okay? And let's hit enter. Oh, I put it in city, that's why. 10703, let me put it in zip code. All right. All right, so in this particular Yonkers, you see this one? This particular condo, Hillcroft Townhouses, was approved, but it's expired and they did not reapply. And this one, Westgate Park Condominium, nothing. It was registered single approval, FHA concentration restricted. So, I mean, it didn't approve it. So there are no condos in Yonkers for FHA financing.
Could you try 10570?
Yeah, I'm going to send you this link. You can keep trying as many. 10570, but this is a link you should have, because I shared with the buyers too, because buyers need to know so they don't bother you. Nothing. So the point is, this is a good, so that's why I was telling you that there are few condos that are approved by HUD. When it comes to conventional loans, we are going to check not just the qualification of the buyer, but the financial, the health of the building itself. But I have more options in conventional.
So does this mean that this is rejected when it says status rejected?
Yes, of course. It's not. If it was approved over here, it would say approved till, and it gives you a date.
Gotcha.
There are many that are approved. Just these two, Zip didn't have it, but there are. You will find. You can play around with it. There are many that are approved. Now, if a condo association wants to apply to HUD for an approval, there's like a 5-page condo questionnaire that they have to fill out, send to me, and I can apply and send it to HUD for an approval. But they take so long, and this whole pandemic has created a lot of delays in a lot of these organizations. It just takes long, and there's an element of uncertainty, right? So that's the painful part about it. Okay, but I like to do conventionals. I do a lot of conventionals because I have many choices, and I do a class on condos because that's an intense topic by itself, because we check so many things in the building. And for realtors, condo is one area where a lot of deals die because of mortgages and because it's not done right from the start. So guys, everybody in this group, at least, don't be the ones like, make sure that the lender has checked the financial health of the building before you get into this deal. Don't waste your time. When I have a condo buyer, I explain it to them. I explain it to the buyer's agent, guys, let's not waste time. Right? No fun. Yes.
Isn't that the attorney's function on the due diligence, not the lender?
Oh, not the attorney at all. It's the lender. We're giving the money and we decide whether we're going to fund on that unit or not. It's us, 100% lender, okay?
Okay.
Yeah. Okay, good. So if you have any like scenarios about condos, you can call me and I can educate you a little bit more. If you have a specific scenario, you can email me, text me, call me, whatever you want, and I can give you info on it. Let's see. Yeah, so all of these, like there are red flags, okay, there's a condo questionnaire that we send to the association to find out a lot of information, and then I can tell you if it's going to be approved for a Fannie Mae. When it's a warrantable condo is when Fannie Mae will fund on it. When it's a non-warrantable condo means that there is some issue with the building, and that's why it will require higher down payment, because Fannie Mae is not going to lend to it. I would love to, Mary, maybe one day I'll do a condo class for the board, because a condo is very important. It's a very important, it's also intense topic, okay?
That sounds like a good idea, yeah. I was just going to say, I know a lot of people have been saying they have to pop off. I actually have a staff meeting at 11.
Oh, we have 5 minutes left anyway,
Yes.
guys. I have not been looking at the chat because I have been just looking at you guys. So did I miss any questions in the chat? Is there something I can answer?
Let me
Can
see.
you please put your contact information back up?
Yeah, I
And
can.
I'll also include it when I send a recording. I'll include her contact information.
But guys, email me. I want to stay in touch with you guys, and I hope I can work with you too, if Mary doesn't mind me saying it.
No, that's fine.
And if you have any questions, you may just have a simple question that you need a second opinion, you can reach out to me. I work a lot. My entire branch, we are known as Hispanic lenders. If you have Hispanic clients, we speak Spanish from start to finish and over. So they love us.
I have a question. Can you hear me?
Yeah, I can.
Okay, this is regarding the new down payment assistance program. Will the FHA loans accept or help people with that program as well?
It's not like FHA is helping you with the down payment. If you get the down
no.
payment assistance, you can use that for the down
That's
payment
what I
and
meant.
couple it up with an FHA loan.
Excellent. Okay, thank
Oh,
you.
good, that's good.
Yeah, it is good. Okay. Let me give you my cell phone number. I should put it. Mary, do you have my cell phone, Mary? Let me
I
put it
don't,
in
is that
the
your cell phone
chat.
or that's your office there?
Okay,
What
I no, I like cell phone because that's where, you
So
know.
email me your cell phone and all your contact information, and then when I send out the recording, I'll just send it all
Yeah,
together.
yeah, all my emails have my cell phone. Cell phone's the way to go. Like there is no such thing
Okay.
as cell phones these days.
Do you do 203Ks?
Oh, who asked that? I am doing, Frank, a CE credit class for this board, for your board, on Feb the 27th, which is a Monday, from I think it's 9:30 to 10:30 in the morning, or it's a 1.5 hour. It's a 2 or 3K class. Yes.
Beautiful. Thank you.
Yeah,
Come and attend.
unfortunately,
Guys, come and attend that
it's
class.
sold out.
What is
It's
that?
sold out.
It's
It's
sold
actually
out.
sold out.
Whoa.
Yeah,
What do you mean sold out?
there's
filled
no
it.
more space.
But why? It's on Zoom. There should be space, right, Mary?
For what are they, what are they talking about? Which one?
The 2 or
It's a
3K
CE
class,
class
they should
on
have
Monday.
space, no?
What, I
Yeah, it
can't
says
hear,
it's
what?
sold out.
I'm so
It's a
sorry,
CE
I
class
can't
that's
hear
being
you.
offered on Monday, and they're saying it's sold out.
Okay, is this a class or is it a,
It's a CE.
Yes.
oh, that
It's a-
you would have to, see, this is not, see, this is just yeah, an informative program. You would have to call our education department and ask. Just call the main number and ask for Lisa.
Is today credit or not, Mary?
I'm sorry?
Did they say today we get 1.5 hours?
No.
No, there is no, this is not a CE.
I
This
didn't think so. I didn't think
Right.
so.
This is
Okay.
just a breakfast with
I need it.
benefits.
Oh yeah, this is not a CE. I think
Yeah.
the 2 or 3K is a CE, Mary?
I don't know, again, that's a different.
Oh, that's
department.
okay, fine.
Yeah,
On
that's
Jan
education.
27th, you could check it out. Here is like a flyer. It's a low down payment flyer that I made for realtors or for your clients in case you want to send it out to them. It just gives you a little definition of like conventional versus FHA versus VA loans. Just a cheat sheet just to have, you know, in front of you or to give it to your clients or whatever. Okay.
That's great.
I could email this to you in case you need it. But yeah.
Why don't you, Sheetal, if you, when you send me an email with your contact information, can you also include that flyer?
Yeah, I
Okay,
can.
great.
Or if you,
Thank
any
you.
of you want anything else, email me and I'll send it to you. And I'm
Great.
going to send it to Mary as well.
Okay.
Thank you. Have a good
Thank
day.
you,
Thank you.
Sheetal. That was, you are just such
Thank you
a
so much.
pleasure to work with because you have so much information and you're so people love you because you're so honest and you just come right out with everything.
Oh,
Thank you all for joining. This is being recorded. It should be available either this afternoon or tomorrow. And please join us next week for our next Breakfast with Benefits on solar energy and how that can save your homeowners a lot of costs. So thank you all.
Thank you so much.
Okay,
Thank
have
you,
a great day.
everyone.
Thank you.
Bye-bye.
Thank you for participating. You guys are amazing. Bye-bye.
Thank you.
Bye.
you.